Welcome to another S&P 500 analysis. Today is June 4th, 2022. The S&P 500 had a quiet week relative to the past couple weeks. It seems like it did not come back from the Memorial holiday 100%. So is this pause before the next directional move? In this video, we'll look at the market sentiment, the internals, and the price action of the S&P 500, along with the other major market indexes, to see if the market is telling us to prepare for another move and where it might be headed. Stay tuned. Now, before I begin, I need you to smash the thumbs up to help me promote this video on YouTube. And if you are looking for an unbiased view on the market, then click on the subscribe to subscribe to this channel. And be sure to click the notification icon to turn on notification so you won't miss any of my future videos. Now let's start off with the weekly chart of the S&P 500. As you can see, this week's range was relatively small compared to the last few weeks. And it only had a little bit over 103-point range, and it closed down under 50 point, 49.7 point, about 1.2%. It is still in a one-time framing up, and it is below this prior pivot low here back in February 21st. Now, the previous week, it closed above it. So basically, we are just kind of back testing this pivot low here. And it is under the declining 10 and 40-week moving average. And also, it's still in a lower low and a lower high type of price pattern. So far as these technical, it is indicating the weekly trend is still down. And looking at the sentiment here, you see the VIX is still inside of this 20-30 zone, and it's pretty much flat for the week. It didn't do too much. Right now, it's basically sitting right near that 25 level. So it's in the middle of this zone here. And also you can see that the put-call ratio, it is above this 0.75. And it is coming up a bit, although it is under this one level here. So the market participants are still putting on hedges and also being a bit cautious. And on the up-down volume ratio, it was relatively mild. On Thursday's rally, it was 4.7 to 1 in favor of the up volume. And then on Friday, the little bit of a pullback, it was 3.3 to 1 in favor of the downside, the down volume. And on Thursday, there was quite a bit of broad market participation because there were 1,689 more advancing stock than declining stock, and vice versa. On Friday, with the market pulling back, the S&P 500, dropping 1.63% or a little bit over 58 points, there were 1,446 more declining stock than advancing stocks. Now, the interesting thing in the last couple of weeks was the number of new high versus number of new low. We see the new high, new low turning positive, and that indicates there were more new high, new 52-week high than new 52-week low. And as you can see, that the number of stock making new 52-week high is slowly creeping up, while the number of stock making new 52-week low, came down substantially when you compare to a couple of weeks ago. And as far as the cumulative AD line in the New York Stock Exchange, you can see that it came up and sort of, just consolidating here. And the S&P 500 also came up and consolidated here. So nothing telling us that there's a negative divergence or a positive divergence between the New York Stock Exchange cumulative advanced decline line and the S&P 500. And for the NASDAQ, the up-down volume ratio on Thursday also came up during the Thursday rally, and almost 5 to 1 in favor of the up volume. But on Friday's pullback, it only had 2.2 to 1 in favor of the downside, so it's substantially less than the Thursday rally, 4.9 in favor of the up volume. And also the advanced decline was 2,353 more advancing issue on Thursday's rally, and on Friday's pullback there was only 1,315 more declining issue than advancing issues. And for the Nasdaq, the new high, new low also coming up as well for the number of stock making new 52-week high, although it is not that big of a number. Like on Friday it was 38. But what really change is the number of stock that is making new 52-week low. So although the new high, new low is still negative, but the margin is getting smaller and smaller. Now, as far as the cumulative AD line for the Nasdaq market, it is actually forming a positive divergence here. Here we see the Nasdaq 100 actually dip below this pivot low here, while the cumulative AD line is still above this pivot low. So we are still seeing a small positive divergence between the Nasdaq cumulative AD versus the Nasdaq 100. Overall, the market participants are still being cautious and are putting on hedges. The daily up-down volume ratio and also the daily advanced decline are not showing panic fear selling or FOMO chasing, the swing up. And the new high, new low continue to show the number of stock making new 52-week high is slowly increasing. The sentiment and internal are showing the market is in a holding pattern. It appears that it is pausing before the next move. Now let's take a look at the price action of the indexes, starting with the SP 500. A couple of weeks ago, we saw this pullback to this 382 and got a nice bounce off of it. And also in addition to that, we have this pivot low here. And I essentially put a Fibonacci retracement on. As you can see on this pullback to the 382, essentially did a major move to this 141 extension. So what I'm going to do now is I'm going to reset this Fibonacci retracement and use this low here. So essentially I'm trying to get a Fibonacci retracement on this entire swing and see what are some of the retracement level coming back up. So you can see that there is this 382 somewhere near this 4194 level, and last week it got relatively close to it. So in the coming week, I'm basically watching for it to see would it be able to get above this 382 and push up to this 50% level here, somewhere around 4312, and maybe do a little bit of a back test on the 382 before it pushes up to the 618, and that will essentially come up and try to break this trend line here. And if it could break this trend line, I'm looking for this thing to move toward this pivot high here, somewhere up at the 4637 level. So that's basically what I'm looking at on the upside in the near term. Now, if it come back down, let's say, for example, I'm able to get above this 382 and then get pushed back, then I'd be looking at a retest of somewhere around this 3810. And I wouldn't be surprised it will get a little bit below this 3810, this pivot low. But I'm basically looking forward to form a little bit of a double bottom, then pushes up and take out the 618 and come up to this pivot high here. And for the Nasdaq 100, we're basically looking for the Nasdaq 100 to come back up to this 382, somewhere close to the 13,000 level. And as you can see, it got close to that, but was unable to get above it. So in the coming week, I'm basically watching to see would it be able to get above this 13,000 level. In addition to that, also remember we saw this Fibonacci retracement, just like the S&P 500. We essentially got this swing here, and then we are looking at the major move down here to this 141, and got this move now. So we're gonna take a look at this retracement level by redrawing the Fibonacci with this pivot low here. And as you can see here, the 382 is somewhere up at this 13,446. So for the coming week, I want to see if the Nasdaq 100 be able to get above this essentially the 13,000 level, and then push up get above this 382, or it could be getting up to this 382 and get a back test of the 13,000 before it pushes up to this 50% level, which would be somewhere around 14,050, and also in confluence with this trend line. So we're going to see what it be able to get above this 50% retracement and break this trend line, work toward this 618, and eventually get up to this pivot high here near the 15,345 area. So that is the upside scenario for the near term. And then for the downside, essentially we're looking for it to retrace back to this 11,500 area and essentially forming a possible double bottom before it pushes back up and try to break this trend line here and work itself back toward this pivot high. And look at the Russell 2000. You see the Russell 2000 is trying to get above this 382 level here at this 1888, and was unable to stay above that. It made a low effort of moving above that, but unable to close above that at the end of the week. So right now we're essentially looking to see in the coming week would it be able to come up and stay above this 382 1888 level here. In addition to that, I also put in a Fibonacci retracement using this new pivot high here. This pivot low here. So we're going to see what it be able to come up and break this trend line, move toward this 382 here at this 1990 level. So essentially get close to this 2000 level. If we could get above this 2000 level, then watch for this pivot high here. After it try to get up to this 50%. At the retracement here. So for the coming week, we're essentially looking at the 2000 and also the 2100, and those are the key levels to keep an eye on. And on the downside, essentially come back down to this 1725 area or near this pivot low. And the Dow Jones Transportation was able to stay above this 382 here, this 13,752. And right now, we're essentially to see what it be able to come up and push us up toward this trend line here. Now, I'm going to move this Fibonacci retracement down at this level also to see what are some of the new retracement level, possible retracement level. And as you can see on this 382, 15,105. And here's the 50% at 15,705 here, which is in confluence with the trend line. So we're going to see would it be able to push up to this 50% level and essentially, make a test at this trend line here in the near term. And then on a pullback, it's essentially once again, we're basically looking at this pivot low here, 13,163. And for the Dow Jones Industrial, as you can see, it did not pull back to any of these retracement levels here, and it pushes back up. And essentially, we had a little bit of a Fibonacci retracement down to a 127. So I'm going to move this Fibonacci retracement to this pivot low here and see what are some of the potential retracement level. And you can see last week it came up to this 382, just a little bit above the 33,000. So in the coming week, what we want to see is would it be able to move to this 50% and push up to this 618. And that would be somewhere around 34,539, and also in confluence with this trend line, and see would it be able to break above that trend line and come up toward these pivot high here. Then once it get above that 36,000 level, then we could be watching the possibility of coming up to this new all-time high at 37,000 area. But just first things first is be able to break this trend line. So we're going to keep watching these levels here in the coming week. And then on a pullback, if it is unable to get up above the 382 or push above this 50% level and then start pulling back, then we're essentially looking at this 3,635 as the pivot low here to do a little bit of a back test and possibly put in a double bottom here to make another push up to this 618 level here at 34,500. And here, looking at the New York Stock Exchange Composite Index here, you see that it's basically just sort of doing a little bit of a consolidation here and try to push up back into this balance area. So essentially right now it's kind of doing a little bit of a pause, and I'm going to put this Fibonacci retracement down at this level here. And you see that it got above the 382 and try to push up to this 50% level and essentially get inside of this balance area. So in the coming week, I want to keep an eye to see what it be able to get, we into this balance area. And if it does, watch your 618 at this 16,393 and also this trend line here. So if it could break this trend line, then we could see it maybe try to make a move toward this 17,000 level. But on a pullback, then we're essentially looking at this pivot low here at 14,695, this pivot low. Here, looking at the 10-year yield, after 3 weeks of pullback, it bounces back up once again. And it is up at the 2.95 or close to 3% once again for the 10-year. Look at the US dollar. Remember, we're basically watching to see would it be able to pull back to this 101 level, and it got close. It's down to at 101.2, I believe. That was the low, 101.3. So we're going to see in the coming week what what we see the dollar pull back a little bit more and get down to this 101, or would it continue to push back up? Remember, I'm still looking at this 107 level. Eventually, come up and tag this trend line here. And here we're looking at the crude oil continue to push up. And most likely it's going to come up and test this level of 126. Remember, I was looking at this 130. That's basically one of the targets that I'm watching, and then eventually it will come up to this 145. Well, I wouldn't be surprised to hear someone throw out 150 relatively soon, or even 175. I would not be surprised. And look at the silver. Remember a couple of weeks ago, it bounced off of this 20.42. And watch this coming up to this level here, somewhere around this 23.5 or so. And I'm saying this right here, that could be an interesting trade location to look for some kind of swing long and bring it back up here to this 27 area. And we have this trend line here. So if we break this, we could make another run. So keep an eye on that. And the downside here, we're basically looking at this $20.42. There seems to be a little bit of a support down here. And for gold, remember I was saying that if it could stay above this trend line, I'm still looking for gold to move up. So right now, this area here could present a nice area to look for trade location to possibly swing it back up. The downside is come break below this trend line and possibly move back down to this zone here, somewhere around 1700 level area. Now, before we go and take a look at the ETF for the SP 500, I just want to show you a couple of the tweaks that I put out. And this one here is on May 30th, Memorial Day in the afternoon. So I put this out and essentially I put in the 3 possible scenarios that I'm watching. The first one is for this thing to come down and fill this gap here. Come down, and basically it is like a look above and fail, and it come down and retrace all the way down to this lower end of this balance area. Okay, so essentially come down to somewhere around this 386.90 or 387 area. That's one scenario, and that would be a short scenario, right? And basically targeting 390. And then the second scenario is essentially just a continuation move upward toward this upper boundary here. And I'm saying that if it does that, then I just be a spectator because I am not going to chase that move. Then on the third scenario is that it come down, fill this gap, essentially try to do a little bit of a back test and then push up into this area and targeting 420, above 420 as the target. And that would be the long scenario. Okay, so that's basically the 3 scenarios that I map out before the market. start trading again on Tuesday. And here's a tweak that I put out on Wednesday, June 1st, in the morning West Coast, essentially, after lunch, around 2 o'clock Eastern time back in New York time. And essentially, I'm saying that scenario number 3 is appeared to be playing out. Right? It came down, filled this gap, and then doing a little bit of a bounce and pushing up. So that's the scenario that I'm watching right now. Now let's take a look at the latest chart for the SPY, the ETF for the SP 500. And as you can see right now, we're basically looking at this composite volume profile and looking at this value area and waiting for the SPY to come back into this value area and come up toward this 422 area, essentially coming up to this trend line here. Now, typically when we play a look above and fail, the target, one of the primary target would be the point of control, or the POC. And this composite point of control is somewhere around 439. So once we get a move up and make this trend line, then one could also have a runner and trail it up to this 439 target. Because I'm essentially just playing for this 420 right now. Then we'll see what the price action is on at this 420, because there could be a possibility that it could retrace back and then double check this area here somewhere around 415 before it pushes up for this point of control. Then if that's the case, then I will look for a re-entry somewhere down here to shoot for that POC. And here looking at the QQQ, the ETF for the NASDAQ 100, as you can see also, we're basically playing this look below and fail and coming back into this value area here on this composite volume profile. So we'll see would it be able to push up toward this 320, because there is this high volume node here somewhere around 320. So we could see some resistance here or some, consolidation here before it pushes up. And the one of the primary target again is essentially the POC, and we're basically looking at somewhere around 342 level there. So we'll basically see how it react when it get up to this 320. And once again, if it come up and do a little bit of a consolidation pullback here to do a little back test, then we might reload and then do this, for 342 target here on the POC. So one could also just kind of, have a runner and trail it up, to this POC. And for the IWM, the ETF for the Russell 2000, it too came back into this value area on this composite profile. So again, we essentially see what it be able to push through and make itself up to push up to this 199 or close to 200. And that's basically the composite volume profile POC here, somewhere near this 199.55 here. So essentially that's what we are looking at, the possibility of the IWM moving up toward that target level. So in summary, the sentiment and the internal are telling us the market is pausing for the next upward move. Although the market received some encouraging news last week on the jobless claim and the non-farm payroll numbers, but they also received some bad news on hiring freeze and layoff coming from some companies. With these mixed messages, you probably are asking, why would anyone think this market will go up? Well, one major reason is majority of the market participants are interpreting these news as bad for the market, and they are waiting for the bottom to fall off. And that will only fuel the market to go higher. A lot of people are still waiting for the market to capitulate. And I have shown you that the internal bottom was made a couple of weeks ago. Right now, the market is not waiting for the bulls to capitulate. It is waiting for the bears to capitulate and hop back onto the bandwagon. And that's when the market will make its next move down to find the bottom. So stay objective and trade what you see, not what you believe. And be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.